All right, let's jump right into the latest numbers from Enphase Energy. We're going to focus specifically on what their CFO had to say, and wow, it's a real story of contrasts. Let's get into it. So what a story it is, right? On one hand, you've got this absolutely record-breaking quarter that looks like nothing but blue skies. But on the other hand, the forecast for what's coming next is, well, it's surprisingly cloudy. So what is actually going on here? Let's dig in and find out. Okay, so here's the plan. First, we're going to look at those amazing Q3 results. Then we'll check in on the company's overall financial health, see what's in the bank. And finally, we'll unpack that kind of cautious look ahead. Let's kick things off with the headlines from Q3. And honestly, they are really impressive. In fact, this was Enphase's best quarter in 2 whole years. The very first number that just pops off the page is the total revenue. Over $410 million. I mean, that is a huge figure that tells you right away, yeah, this was a fantastic quarter for them. And it's not just about the top line revenue. Check this out. A record 195 megawatt hours of their IQ batteries were shipped. This is a big deal because it shows that their big bet on energy storage, it is seriously starting to pay off. Now, here's where it gets really interesting. Almost $71 million of that total revenue comes from something called safe harbor revenue. So what on earth is that, and why does it matter so much to this story? Okay, so in simple terms, these are basically bulk sales to big customers. They're buying up equipment right now, mostly to lock in their eligibility for things like federal tax credits, even if they're not going to actually install it all for another year or more. It's a really key detail for understanding the timing of their sales. So we know they're selling a lot, but are they actually making good money on every sale? That's where we have to look at profitability, and specifically something called gross margin. It is the real stress test of a company's financial strength. And this chart really tells the story. It's not just that revenue went up, their non-GAAP gross margin, which is just a cleaner way of looking at profit, also ticked up to almost 50%. The bottom line, they're becoming even more profitable. So what's behind that strong number? Well, it's really a tale of 2 forces. First, they got a huge $42.5 million boost from the Inflation Reduction Act. But at the same time, they got hit by reciprocal tariffs, basically taxes on imported goods. It's a perfect example of how government policy can both give with one hand and take with the other. All right, let's pivot for a second. We've talked about income. Now let's look at the balance sheet. This is like a snapshot of the company's overall financial stability, and we're going to start with the most important thing, cash. And when it comes to cash, wow, they are sitting on a mountain of it. We're talking nearly $1.5 billion. That is an enormous safety net, and it gives them incredible flexibility to make big moves. And look, this cash isn't just sitting there for show. They've got a pretty big debt payment coming up. Over $630 million due in a couple of years. And the CFO was really clear about it. They're just going to pay it off with cash. No problem. Now, here's something that you just know has to be a little frustrating for them. They are owed almost $280 million in tax credits from the government. But because of IRS delays, they're not expecting to see that cash for years. That is a huge amount of their money just tied up in red tape. Okay, so that was the fantastic Q3. But this is where the story takes a sharp turn. Let's look at the official guidance the CFO gave for the 4th quarter, because it paints a much, much more conservative picture. This little table here says it all. I mean, just look at the drop. Revenue, profitability, and even those battery shipments, they are all expected to come down significantly. After such a monster quarter, that is a surprisingly steep downturn. So what gives? Why the big drop? Well, the CFO gave us a pretty direct answer. A huge piece of the puzzle is that the Q4 guidance does not include any of those big safe harbor deals that pumped up the Q3 numbers. This kind of suggests that some of Q3's strength was really just business pulled forward from the next quarter. So after looking at the record highs and the kind of cautious lows, what's the real story here from the CFO's chair? Let's just quickly recap the main points. So let's put it all together. Q3, an absolute home run. We saw record sales and strong profits, definitely helped by those IRA benefits. They're also sitting on a fortress of a balance sheet with almost $1.5 billion in cash. But The road ahead in Q4 looks a bit bumpier, especially with those safe harbor deals out of the picture and tariffs still taking a bite out of their profits. And really, that brings us to the big question, doesn't it? We've seen what Enphase can do when the wind is at its back. Now, we're going to get to see how they handle the headwinds. How they navigate this expected dip in Q4 is going to tell us a whole lot about their strategy for 2026 and beyond. Thanks for joining.